following on from our story earlier, on the opening day of the World Government Summit, the Managing Director of International Monetary Fund has said that the MENA region needs a state-of-the-art tax system to fund its priorities in an equitable and an efficient way. During her on-stage interview, the head of the IMF, Lagarde, touched upon a number of issues affecting the global economy, such as the inauguration of the new US president, upcoming French and Dutch elections, as well as the global impact of Brexit. Re-elected for a second five-year term in February 2016, the head of the IMF also commended the efforts of the UAE and Gulf countries for their plans to implement the VAT system in January 2018 to support their government agendas. While sharing her recommendations to the governments during the World Summit during the current of the global climate, the French lawmaker stated that the #1 priority for governments around the world is to be resilient and anticipate change.
You need public investment. To have public investment, you need public funding. Now, if those fundings are reduced because the price of the barrel has gone down by about 50% relative to the very, very high prices of 2014, that money needs to be found somewhere else. And as a result, there has to be a degree of taxation. And I really would like to pay tribute to most of the Gulf countries in particular, led by the UAE, for deliberately willing to put in place a VAT. I think the agreement was signed a week ago that it's going to be effective beginning on January the 1st, 2018, at a relatively low rate and with a system that hopefully will be simple enough and digital enough, because you start from scratch and you can be innovative in that respect, so that it works. There are governments that actually, are cautious with what they do with their funds and, are prepared to do a bit of deficit when it's a question of investing into the future. So if you have investment, if you have operations that are sensible and correspond to the people's will, then clearly you need the revenue to go with it. It's a very, anybody who's doing accounting knows that.
Well, commenting on the international political environment, Lagarde also expressed optimism for the US economy under the current Trump administration. Despite a boost to the US economy after tax reforms, it was added that it could raise concerns in the global economy due to an interest rate hike by the Federal Reserve. Furthermore, the head of the IMF said that governments should also be more agile towards changing international financial regulations, as well as be more mindful about excessive inequalities, which, according to her, have been a root cause towards the popularity of more radical and protectionist political thought.
I would say priority #1 for countries and for policymakers is be resilient, be solid in your public finance, have the buffers that will help you in case of shock. That's #1. I would say #2, because we've seen it in 2008, the financial linkages between countries, the environment into which finance fuels the economy or plays by itself, that is critically important. And I'm going to be very mindful of where international financial regulations go. And #3, I think it's critically important that governments around the world be also mindful of excessive inequalities, because I think that's at the root of a lot of this confidence issue that we discussed earlier.
Ratings agency Standard & Poor's believes that the volume growth of sukuk issuance this year is expected to remain flat, largely due to the complexity of issuance rather than liquidity that is limiting sukuk growth. The volume of sukuk issuance across the GCC was muted in 2016 compared with conventional bond issuance, and according to S&P Global Ratings, global head of Islamic finance, while the agency sees liquidity in the GCC as adequate in a global comparison. It stated that the less supportive economic environment is translating into fewer growth opportunities. While S&P acknowledges the drop in liquidity, the rating agency said, compared with global peers, Gulf banks still carry a hefty part of their assets in liquid forms. It was added that while the decision to issue sukuk or bonds ultimately lies with the issuer, it depends on many factors, including including the cost of issuance, the capacity of the market to absorb the transaction, the issuer's target investor base, how ready the issuer's regulatory and legal environment is for sukuk issuance, and the complexity of structuring sukuk. In the GCC, Islamic banks are among the main investors in sukuk, and the Islamic finance industry remains dominated by banking, which accounted for more than 80% of the industry's $2.1 trillion of assets at year-end 2016. A total of 4,000 construction projects worth $313 billion are active in Dubai, indicating a strong year ahead for the industry. That's according to a new report. Dubai's strong construction trends look set to continue through 2017, with 39% of the UAE's total projects that are in the concept, design, tender, under construction and on hold phases. Data from BNC's construction analytics showed that Dubai's urban construction sector has more than 3,200 active projects, amounting to a combined estimated value of over $245 billion. This is followed by the transport sector with 187 projects valued at $32.4 billion, the utilities industry with 203 projects valued at $24.3 billion, 377 industrial projects valued at $5.8 billion, and 12 projects in the oil and gas sector totaling $4.6 billion. BNC added that December 2016 saw 37 active projects worth an estimated $2.2 billion moving to construction in Dubai. As of the end of 2016, the total number of projects under construction was 2,508, with an estimated worth of around $92 billion. Some of Dubai's current multi-billion-dollar projects include Dubai Metro Red Line Extension, which is a part of the Expo 2020 initiative, Container Terminal 4 of the Jebel Ali Port Expansion Project, and the Royal Atlantis Resort and residences located on the Palm Jumeirah. The global economic anxiety and growth slowdown across regional markets has played a significant role in the decreased demand for industrial real estate in Dubai, as according to a new report by real estate consultancy Cluttons. The biannual Dubai Industrial Market Bulletin for spring 2017 showed that activity in the sector has curtailed, despite it being among the most resilient in the emirate over the last 2 years. Clutton's data also showed that this has led to capital value corrections in most of the Emirates submarkets. The research said that values are still perceived to be lean, and noted that some opportunistic purchasers are now making acquisitions in secondary submarkets. The report also showed certain shocks in Javza faced price drops of up to 20% over the course of 2016, largely due to the migration of occupiers from older to newer facilities within the area.